All right. Thank you, everybody, so much for joining us today. We have a great audience. I'm really impressed with the number of people that have hopped on today, and I just want to thank you all for taking time out of your busy day to be a part of this opportunity and to learn with me today. So my name is Mary Overby. I'm an outreach manager for Small Business Majority. I am based out of the Springfield, Missouri office. However, we are national. So you can see there in that second bullet where we actually have physical offices. If you are in one of those areas, feel free to reach out to us. We'd love to talk to you. And if you're not, then find the one closest to you and reach out to us after this webinar. Talk to us, tell us what you liked, and really how can we help you as a business. We are an education and advocacy organization. So we do a lot of connecting small business owners to advocacy opportunities such as letters to the editor or speaking to your congressman, but we also do a lot on the education side and collaborating with local resources and helping them connect to small businesses. We act as a conduit very often to make sure that everybody can know what exists in their entrepreneurial ecosystem and how to connect to that so that you can better your local economy. We focus on a lot of topics outside of just growing wealth and retirement building. We do focus a lot on access to capital. We focus on healthcare, rural business development, technology, energy saving, just a whole wide variety of different topics there. And you can go to our small business resource portal to see some of those other topics. And we said we have a couple of people that are having audio difficulties. If you can hear me, please let me know. So people could just type into the chat box if they can hear me. Okay, so we do have people that can hear me. Thank you guys. Good, good. Perfect. Okay, so if you are having technical difficulties with your actual audio, call into the line that's provided and see if you can get that over the phone. And I put that number in there. Let me just repost that so it's down there at the bottom. Okay. And with video, I don't know how to help you there. Maybe log back out and log back in. Okay, so getting back in there, visit our small business resource portal. I really highly recommend you do that. We have a lot of really great information, research on there, a lot of good templates that you can download and things like that. So let's get into the meat and bones of this presentation, and that is how to grow your wealth as an entrepreneur, as a business owner. A lot of times in this presentation I'm going to say we. That's because I not only work for Small Business Majority, my husband and I own a landscaping and lawn care firm. And so we are really invested in this topic because it hits very close to home for us. I mean, eventually our goal is to have economic freedom and to be able to retire. We want to be able to build our wealth. And so we're going to talk today about just some different ways to do that as either a self-employed entrepreneur or a small employer. And also, if you do have employees today, the things that we're saying apply not only to you, but to your employees as well. So a lot of this information can be passed down to them, and we really encourage that you do so. As we talk about wealth today, we want to remind you that it's not just your income. So when we think about wealth, normally we think about how much money we have in the bank. And so we really want you to start thinking about wealth as a variety of things around you. And that can be your stocks, that can be any accounts receivables that you still have coming in. Financial, non-financial assets like the cars, if you have any inventory. I know a lot of us as business owners, we do realize that that is something that could potentially give us cash in our pocket if we sold those things. But when you're taking into account your entire cash flow and your actual wealth, it's really important to do that because we're going to talk a little bit about succession planning and what that actually looks like in the end. And that's all of these assets are part of that wealth. So this is just a basic slide. What drives revenue and income? We know these things. It's our product. It's our service. It's what we provide as a business owner. It's our customers. If we don't have customers, we don't have income. And it's our human resources. It's within our organization. Are our operations streamlined? Are they efficient? Are we being as effective as we can be? Have we reviewed our processes and processes over the past 5 years or past year to make sure they are still the most efficient? So continually doing that, making sure that your marketing is up to date to target your specific clientele. Obviously, if you're marketing and it's not going to the right people, you're not driving your revenue, it's not benefiting you. And then the last thing there, the financial planning tools. I've met a lot of business owners recently who have been very good at having their financial planning tools already completed. They have their business plan, they have a break-even analysis, they have their cash flow projection, but that has not always been the case. I've worked with a lot of business owners who were not familiar with these. So I would encourage, if you do not have these in place already, to go to someplace like the SCORE, National SCORE website, SCORE Mentoring Network. They have free templates that you can download. You can also set up a one-on-one meeting with a mentor in your area who will help you go through these one by one and develop them. They will teach you how to do so. Same if you're near an SBDC or an SBA office. There are a lot of mentors. If you're in a really rural area and you don't feel like you have those, just know there are a lot of mentors that will do virtual mentoring as well. So there are a lot of free opportunities out there for you to get help to make sure that you are really planning appropriately. So within the business world, I think we're all aware cash is king. But really the bottom line from what they found from research, this comes from the SBA, I believe, that poor cash flow management is the cause of 82% of all business failures. So that last statement there was the cash flow analysis, and then that break-even analysis. Both of those are essential to making sure that you don't fall into that 82 percentile. You want to be part of that 18%, and we actually want to decrease that 82 with presentations such as this and sharing this kind of information. And so the way that we really want to do that is to teach you how to invest twice. So obviously we have to invest back into our business. And then obviously we're trying to support ourselves in one way or another. Be this if this is a part-time job that you're doing, a part-time business, or if it's just a side gig, if you're a freelance consultant, solo entrepreneur, whatever it is, all of these tactics that we're going to talk about here in a second can help you make sure that you're going to have an effective retirement and have a little bit of savings. So tactic one, and this is going right back to what we just said, is that understanding the cash flow, making sure that you know what's going out and what's coming in every single month. For business such as ours, our cash flow is very, very different in the summer months than it is in the winter, especially since I'm here in Missouri. And we provide services in the winter, but they're just not as frequent. So knowing your cash flow and how that changes my receivables year-round really helps me know how I'm going to be able to pay my payables, my debts, my liabilities over those lean winter months. And so I can prepare ahead for that. So within the receivables, you obviously are taking in your payments, but you need to consider the time frame of your payments. Do you have do you want 45 days? Do you have a 60-day? Do you work with government contracting that it's going to be 6 months potentially, or when the job is due? You really have to make sure that that kind of information, it's not just the payments that are there, but when are you going to get them? So you may complete the job or provide the service in June, but if you're not getting the money until December, that should not be in your June cash flow statement. It should be closer to your December, just so you can plan ahead. You also need to look at any kind of equity or loans that are coming in. Will you be getting anything from the bank or from a CDFI or things like that? And then as well, goods, merchandises, and services as you're selling those. Do you have, if you're selling a good or a service or merchandise, do you have months that are more profitable than other? Maybe you're back to school, Christmas time, Thanksgiving, or as you know, all kinds of different, I don't know, for services such as ours, it's obviously, you know, the summer months. But throughout all of that, your payables are probably going to be pretty much the same, except for when you hit your quarterly taxes, or maybe you're in a state that does gross sale taxes or sales tax receipts and things like that. So knowing what all of those different ones are broken out and what it's going to look like every single month will allow you to really understand your cash flow. So tactic 1, cash flow, guys. Gotta know cash flow. Soon as you know your cash flow, that's when you can start building your cash reserves. And so JP Morgan Chase actually did a study that say that cash reserves are the actual indicator of business vitality. But the majority of businesses only have 27 days of cash reserves in order to support their business. So for 27 days, they could support their business with the cash that they have in reserves, paying those payables. So as you start doing your cash flow statements, you're going to see what you should have in reserve, what your leftover, what your income, what that wealth is. And then we're going to talk about how much you should put back away so that you can build that cash reserve. And your average, what I normally advise businesses when I'm talking to them, when you're looking at your cash reserve, you should try to have 3 months. That should be your goal for where you can go, and that will give you enough of a buffer. Maybe you have a big client that's going to be paying out, or you know that you've got a good, a good crop coming up, a good month coming up. That'll get you to that when the times are lean. So here's your tactic on how to actually distribute your business income. So you have your cash flow. You know how much reserve you have left. Here's your money that you have left over after you've paid your all of your payables for the month, and you've got all your receivables in for that month. What's left over should be, and there are a lot of different formulas, by the way, but the one we're going to talk about is the 40-30-30. So 40% of that leftover income should go back to your business. And that can be in the form of purchasing new equipment, expanding your services in some way, or putting it into the cash reserve. But 40% of that extra needs to go back to your business. 30% should come to you as an owner. You need to actually pull a salary. I know my husband and I struggle with this because we're consistently putting it back into the business instead, or utilizing it to build our cash reserves, or make sure that our bills are paid, or utilizing it for our kids in some way, form, or fashion. But that 30% needs to come back in for owner salary. And then you need to look at 30% for savings. So this is going to be your cash reserves for you personally, your personal savings, and then retirement. And so you can split those 3 up however you want. If you want to do 10-10-10, if you want to split it up differently, 15, 5, and 10, whatever you want to do, but you need to make sure that you try to put those 3 back in. If you're having any kind of issues determining what kind of salary you should have, you can go and do a Google search so easily on that. And just Glassdoor, I think, is really good at providing you with sample salaries for your specific business and what stage you're in. Now, I mentioned earlier SBDCs. If you're not familiar with what that is, that's a small business development center, and they often offer free and low-cost assistance. They'll work one-on-one with you to do any of these kind of things we're talking about today. They also provide a lot of personal trainings in your area. They don't do as many webinars, but they do a lot of face-to-face, and they're a great resource. Same with SCORE, Mentor, Network, and things like that. But you can find those, all of those are SBA programs, so you can go onto their local assistance and find out who would be closest to you. And a lot of those have very extensive areas. So even if you are not right there in their community, there's a very good chance that they could cover your actual area. Okay, so tactic 4 is to foster a supportive culture of savings. This is about changing the way we think. This is about changing from us thinking about our immediate needs and how to constantly fulfill them to thinking about how do I save for the future. We want to decrease that retirement gap. That's the goal here. Christopher, the 40-30-30, 40% back to business, meaning to employee salaries and other expenses, yes. So those are part, well actually no, because those are part of your normal debt payables. So you know you're going to be paying out those same things every single month. They should actually go into your payables column. That 40% is what's left over after employee salaries and other expenses. So if that doesn't make sense, please let me know. But that 40% is part of what's left over after all of your regular expenses. That includes employees, workers' comp, general liability, any of those kind of taxes, any of that. That 40-30-30 is what's distributed after it's left over. Okay. Yeah, so if it's $15, you distribute that $15 40-30-30. Okay, let's go back to this one, fostering, and thank you for asking that question, Christopher. Please, if anyone does have questions, throw them in there. I often do try to answer them just like this because I want to make sure that you're getting out of this webinar what you need. Okay, so fostering a supportive culture of savings. There are 5 bullets here. They are all equally important. So business taxes is actually one of the leading killers of small business. We know that. They're expensive, especially if you have employees. But what we're hearing from the IRS, what we're hearing from lenders and from business counselors, no matter what stage a business is in, if it's startup, if it's established, if they've been around 20 years, businesses neglect to pay attention to financial management so they have enough for taxes. So what they recommend you do is within your checking, your bank, wherever you do your checking for your business, set up a completely separate account that is dedicated just for business taxes. So if you pay payroll, once it's broken out, or if your accountant does this for you, if you're lucky enough to have one, hope you do, and I encourage it. I try to do my own, but you know, put that money that's supposed to go for taxes directly into that account so it doesn't sit in your business operating funds. It immediately goes back to you have it available for when tax time comes. So if you know that you're going to be paying, you need to put in $300, go ahead and put that money into that account so it's not sitting there and you think that you can utilize it within your normal cash flow. Preparing a business exit strategy, and this is something we don't really think about. This is definitely a smaller focus for the majority of us. We know we eventually want to not be running a business. We know eventually we want to retire, but we don't have that plan in place. The sooner you plan for that, the better you're able to protect your assets and make sure that you actually get what your business is worth when you do actually retire or if you sell it. A lot of them have your book of business that's there, or we have the binder that, you know, our counselor told us if your business burns, this is the thing you grab. It has all of our information in there so that we could still sell our business. So just make sure you get it all in one place. And there are a lot of templates out there for that as well. So feel free to, like I mentioned SCORE earlier, go to their website and see what they have available because they'll have a template for that. Okay, and then investing in a personal emergency savings to prevent withdrawal of retirement or tax savings accounts. So the majority of business owners do not have a large amount of savings. or retirement or tax savings accounts. You don't want to pull from those accounts. You want to leave them there. You want to have them generating interest. You want to make sure that your retirement stays where it is. I'm not sure how many of you were like me and my husband when we started our business. We thought it was a great idea to utilize our 401k my 401k from my previous job. And now, we didn't want to start with debt. We thought that was a good idea. Now we know that that was not a good idea. We lost a lot of money by doing that because they take a lot of your fees out. So you want to leave that there until you're actually in retirement. So you need to invest that. That's part of that 40-30-30 is for it to go back into that personal emergency savings. And then if you have employees, encouraging employees to have a savings. One of the things that we hear the most is that maybe you're doing everything correctly as an employer, but your employees just are not able to do it. They're living paycheck to paycheck. They do not have money management. They are constantly broke. These are things that as an employer you can really work with them on. I know we work with our employees on this kind of stuff, trying to figure out how to help them save so they have something put back if they have a car breakdown or things like that. Also knowing your resources that are available locally to help your employees and passing those resources on to them are a really great way to do this. And then, of course, retirement plan. This is the key to you actually being able to retire, right? You need to have a plan in place, and we're going to talk more about that and what that looks like because it's not actually nearly as hard as a lot of people think it is. So moving right into that, there really are a lot of plans that are available, and you can easily save and invest. Tax benefits, if you're not aware of the tax benefits that are actually available for you as a business owner, talk to your tax preparer, talk to your CPA, and talk to a financial advisor because they are going to be able to tell you a lot more for your state, for your city, for your location, how these tax benefits, these tax plans could actually help your business. Now, one thing we do know is that employees want to be offered retirement plans. It's a definite benefit for an employer to provide some form of retirement plan, some 401k or some kind of stock option or something. If you don't offer a plan, if you're not in a place where you actually can, you can still share different kinds of educational materials and resources that are available out there until you can offer a plan. So we talked about what kind of employee resources are you talking about. Excuse me, I apologize. Specifically what I was talking about on the previous slide, we were talking about employee savings. Most places have consumer credit counseling locations that can help develop employee cash flow statements of their own for personal savings. And those services are for free. So knowing that they have somebody that they could sit down and talk to is really often a great resource to provide them. If you're not necessarily as an employer going to be able to do that, and they may not want you to know what their finances look like, but having someone that they can go to. Financial advisors, so people who sell financial packages and sell retirement plans, a lot of them are licensed to actually do the benefit analysis as well. So if you are working with someone to offer retirement plans, ask them if they are licensed to do the actual cash flow savings analysis with your employees as well, if you can provide that as a benefit. A lot of times they will do that anyway. You can provide them with those educational resources. Another thing to look at for resources, there is a If you're not familiar with what CDFIs are, they're Community Development Financial Institutions, and they provide microloan programs. They provide credit building programs, which is huge, especially for you as a business owner or for your employees. Providing any kind of local credit building programs to your employees is a great way to help them get out of the cycle of paycheck to paycheck. But CDFIs sometimes have loans that are specific for employees and not just for the employers. The majority of the time it's specifically for the business, but I know here locally, our Justine Peterson as our CDFI sits here. And they have loans like, I think they're called work-life loans, where if somebody needs a quick loan to get, because their car broke down, and or if they have, they need new tires, or they need money for their utility bill just to get there. They have these quick, small loans that are designed for employees because they recognize that if your employees are stressed out about finances, if your employees are constantly thinking about how are they going to get to work, they're not being as productive for you. Okay, so let's get into talking about the actual retirement security, because this is what we want to really hit. Now that we know a little bit more about how to utilize your wealth, how to build your wealth within the business, some of those tactics, and you guys, once again, you will be getting the PowerPoint slides after this webinar. So you can take notes, but you will be getting this later. And just to give you data that you can take notes on now, let's talk about the actual retirement crisis and why Small Business Majority has received funding to focus on this. And I think it's obvious with the amount of people that signed up for this webinar today that this is a big issue for all of us. And the majority of Americans really do believe that the nation is facing a retirement crisis, and 3/4 really are concerned about their own ability. The median, so the middle, the average retirement savings is $3,000 for working households. Now, I know that in Springfield, Missouri, $3,000 is going to last me a little bit longer than if I lived in California or New York or in a higher cost of living area, but it still is not enough to get me through 3 months by any means. So having $3,000 in a retirement account is not enough. So what they've actually said is their estimate is that the actual savings gap is between $6 trillion and $14 trillion. So that's what we're working with. That's what we're trying to eliminate. That gap, that difference between what you actually need to retire and what you have for savings is just very high. And there's a lot of different reasons for this. One, yes, is Social Security. I know that I've grown up hearing that I probably will not have any. I have no idea at this point if I will, but I need to plan like I won't. It's the way I look at that. Most people who do receive Social Security, it's not enough to live on. So even if you've worked your whole life with cost of living increases, it's often just not enough anymore. Another reason for this gap, you have the decline in the traditional pension plans. We're going to talk a little bit about how many people actually have retirement options at their work and how many don't. But really the traditional pension plan it's not a reality for most people anymore. Another reason, increased life expectancy. So we're living longer. That's great. That's great, but then we need more money to make sure that we can make it through those longer years, longer decades now, in comfort. So we need more money in order to actually retire. And then the other thing is market uncertainties. I know we all remember 2008 and 2009 when the stock market took the hit. And I had many friends who were close to retirement that were just devastated. And for those that weren't, they've been having to build it back up. And maybe some of them are now getting there. But that created a huge hit in the gap, large one. So where do small businesses fit in? And this is a big deal for me as a small business owner, but also for a lot of the business owners that I work with. You know, the majority of people who don't have a 401k, it's because their job doesn't offer one. And when you're looking at part-time workers, 60% will not have employer-backed retirement accounts. And that's because, you know, we always want to provide for our full-time workers, but we don't necessarily think about the part-time workers. And so even if benefits are offered, maybe health insurance or this 401k are offered to your full-time employees, maybe you're not offering that benefit to your part-time quite yet. So reevaluating how you as an employer can make that happen for that 60% or for that 40%. So when you're looking at small businesses with less than 100 employees, and we know that the majority of that size range actually have less than 20 or 25 employees. So 50% though with fewer than 100 employees have access to retirement plans. Now if you're looking at over 100 employees, that jumps to 89%. So a small business, we really want to provide benefits that keep and retain good employees. We don't want them going to a large business where they have those benefits. We want to try to figure out how to help you provide those benefits. The majority of small business owners that do not provide, so 50% say that the reason they're not providing retirement security is because of the cost. And so there is an administrative burden. There are fiduciary concerns. However, things have changed a lot within the retirement world, and so there aren't as many costs associated with it. I know a lot of us aren't going to have HR that can handle this, or you know, you have to sift through plans and different advisors to really find the one that fits for you. So it takes some time, and that's time away from your business. However, when you're looking at providing a resource for yourself to retain your retirement security and or for your employees, sometimes the benefit is going to outweigh, you know, the pain of getting it set up. So you need to take that into account. So for the other thing, the last bullet there, the lack of understanding on how retirement plans work. I mean, this is just huge. I'm not a financial advisor. I in no way, shape, or form pretend to be. I don't know everything about auto deductions and how to set this up for me and for my employees. What I do know, luckily, within my community are a lot of people that I would trust to help me do that. And a lot of those financial advisors are not getting paid by you to actually help you go through those plans, to help teach you about these. They get paid on the back end from the actual financial provider after the plan has been secured. So you as a business owner are not paying them up front. They make their money once they sell those plans. So that's just a really good thing to remember, that those last two bullets there can actually be alleviated just by talking to the right financial advisor and knowing how their plans work and how their payment structure works. So going into that, let's talk a little bit more about the different options that are out there and how to look at the different plans. You know, the biggest thing to know is that the cost of operating a business retirement plan has declined, and the services and the features of plans have increased. So you're looking at getting a better bang for your buck, per se, now than you ever would have before. There are a ton more plans that are out there that qualify for special tax benefits and tax-deductible contributions. And they go with both of the different options there. So we have a couple of different plans here. There's actually, you'll see on the next one, there's a lot of options. But the basic categories that you have are defined benefit plans. These are things like your pensions. They're normally employer funded. So these are the ones that when you provide it out there, you're saying, I as an employer will put $10 per paycheck in your 401k. And then you have the contribution plans where it can be funded by just the employee, or you can also match or provide if you still say you want to put in $10, but the employee can put in whatever they would like as well, or you could match. So you have the benefit, which is strictly a benefit for the employee, and then you have the contribution plans where employees can actually provide additional funds to go into their retirement plan. So you also have, within the contribution plans, you have group trust plans. They do have more work. It takes more work. There's a good example of this is, you know, an owner cannot take the salary funds that are salary deferrals for retirement and then spend the money to buy equipment. It actually has more restrictions. So your financial advisor, like I said, can talk to you much more about that. But if you're looking at something like that, you know, you have more contribution options. You can do more with it and potentially get great money back. IRA-based plans are much more common just because there's less fiduciary responsibility and cost, but they're also more limited within their options, and sometimes they have a lower salary deferral as well. So here's just a general overview of workplace-based plans. The most common, of course, is the 401k. I think that's something we've probably all heard, and this does have tax benefits for you as an employer, and you only have to file an annual return with the IRS. Your accountant, your CPA, or your financial advisor should be able to help you with that as well. They are multi-participants, so you have to have at least 2 people, and normally it cannot be a partnership. So if you have an LLP structure and it's you and one partner, or husband and wife, normally it has to be an employee that's brought into that. Sometimes they'll allow a partnership if you're not related. So you really just have to find out for sure. If you see one you like, you have to just look at the fine print on that to make sure you qualify. The more common one then for if you are a solopreneur is obviously an individual 401k, or if you're offering something like for your employees that you're not actually putting in, you can look at that. So there's a lot of different names. They typically are less costly than your regular multi-participant 401k plans, so they're a really good option if you're a solopreneur looking to have some way to contribute to your own retirement or provide education for your employees. So this is one of those resources that you could provide to your employees. You could provide them information on what an individual 401k is, how to access it, how to pick a good one. There are probably hundreds of worksheets that you could download and just print off and hand them. And a lot of times they recommend doing that once a year. So when you provide them with their W-2s at the end of the year or at the beginning of the year, then you provide them with something on 401k as well. Just make it a regular part of your employee handbook, make it a regular part of the materials they receive upon hiring, and then annually, just so it's constantly in their mind. SEP plans, or Simplified Employee Pension Plan. This is where you have an employer contribution set up for each participant. And those contributions that you make are tax deductible, and you'll pay no taxes on any of your investment earnings. So that's really important to think about as an option. They're not locked into making contributions every year. So if an employee decides they don't want to one year and then they decide they want to again, they can still do that. And this is something that you could set up with partnerships, solo proprietors, S-corps, any of that kind of stuff. So there's a lot more flexibility on who can actually access that specific retirement plan. And then you have the simple IRA, and this is a savings incentive match for employees. So the employer has tax deductible contributions, and the employee gets salary deferral. And the salary deferral limit is lower than the 401k, so it's important to know. This is one thing that's really important for an IRA, is that as an employer, you will be required to make some level of contribution. So with the SEP or the 401k, you are not required, but this one does have an actual requirement on it. So if you're not capable as an employer quite yet of making that contribution for anyone other than yourself within your business, this is not going to be the option there. That's something to have a goal potentially for yourself, because you do get more returns on those normally. But that may not be the one you need to start off with. There are lots of states actually out there right now that are exploring secure choice plans. And this is basically setting up a state-based plan for retirement, so that as an employer, you don't have to do it yourself. It's sort of like paying out your Social Security or your Medicare or your state taxes. It comes up directly out of an employee's paycheck, and it sets it up for them automatically. And so you have multiple states, as you can see, that are exploring this. We have multiple that have actually already passed laws. Just recently, we had some states that did that. So majority of the states have looked into it. The blue ones, if you're like me and you live in one of the blue ones, sorry, we're not looking at it yet. But if this is something you're interested in, as I mentioned, we do a lot of advocacy, so let us know. We'd be happy to connect you to your state legislators or your local media, so that you can talk about how important something like this would be, your retirement in general is for businesses. So let's talk for just a minute about the tax credit for actual startup costs. So if you have 100 or fewer employees and you are going to be setting up an SEP plan, the simple IRA or the 401k plan, you could potentially get 50% of your first 1,000 expenses back in 1 year. So if you're spending $5,000, you would still only be getting money, the 50% back on the 1,000. But if you spent less than $1,000 on startup costs, then you could potentially get up to $500 back. And this goes for the first 3 years of the plan. So costs vary when you're starting up a plan. Generally, IRA plans are cheaper to start up, but they're going to vary by the plan type, by your business size, how many employees you have, what plan option you're going with, if it offers loan options like vesting or things like that. All of those are going to impact the administrative costs, how long it's going to take to get that started up. So, but just know that there is that tax credit available that you can actually utilize to sort of offset that cost. So if you've been on the fence about getting something started, you just know that there's something out there. And there's that link there down at the bottom where you can find out more. You can also talk to your CPA or an accountant, and they can help you out with learning more about this tax credit. When you are looking at plans, I think you've gotten the idea that there are a lot of options within just the plans. And we talked earlier about one of the reasons that employers are scared to start retirement plans is because there's so many different features. There's so many different options to look at. How do you know what's right for you, and how do you know what's right for your employees? These are just some basic guidelines, some key features to help you narrow down the questions that you have. So utilize this slide when you're looking at them and answer these questions. So if you're looking, you want to look at 401ks. Then you're looking at the plans within the 401ks. Go down this list and check them off, and then create a spreadsheet. If you're a spreadsheeter like me, I spreadsheet birthday parties. It's just known to happen. Create that spreadsheet and really put them side by side, because some of these are going to hit, really good points for A, B, and C, but not for D and E. And you have to really rank them and do a hierarchy. Is it more important for you to have employer contribution options to where it's required or elective, or is it more important to look at your compensation limits, or if there's an age restriction? If you employ younger staff that are under 21, a lot of plans are not eligible for them. If so 18, anywhere from 16 to 21, they would not be eligible to participate in this. So it's something that's really important to look at if you have younger employees, college age employees or high school age employees. Let me see if there's any of the other ones here I want to really hit on. I mean, obviously you're going to want to look at the reporting structure on this and what you have to do as an employer. Some plans are going to require more paperwork every year. So if it's really important for you to have a streamlined process, you want to know that beforehand, before you get everything set up and before you get everybody contributing, and then realize that it's going to be a horrible pain for you every year. So look at that kind of thing beforehand. Some plans may have a restriction that your employees have had to be with the business for a defined period of time. Maybe that's 1 year, maybe it's 1,000 hours. So if it's important to you that you want to be able to hire employees right off the bat and provide them with a retirement option, so that's a benefit for you, it makes your hiring process a little bit easier, you can automatically take any plans off the table that don't provide that service. However, if you want to add that as an incentive for employees, like, hey, when you've been with me for this period of time, then you start getting 401k options or an SEP retirement plan options. You can use that, whatever works best for your specific business, and it's going to be different for every single one of us. So just knowing what those plans, how they're structured. Some plans do have a maximum contribution. So if you have a workforce that is maybe elderly and nearing retirement age, they may want to contribute more to their retirement plan. Maybe they need to in order to actually save, so they would rather put more into their retirement plan. Some of these plans are not going to allow that, so you really need to know that it's going to be based on your needs as an employer as well as your employees' needs. You want to look at administrative fees. Who pays them? Do they come out of the employee's pocket? Do they come out of yours? Do they come out of your fiduciary's pocket? Finding that out beforehand is really great so you don't get any shocks or surprises. And then you do want to look at withdrawal restrictions. A lot of them allow rollovers. A lot of them allow, if a staff leaves, the plan goes with them. And then a lot of them do not allow that. They stay with the company versus with the employee. So if you're really looking at providing an employee benefit to help with their savings, you want to make sure that that kind of option is available. We had a comment or a question come in, could you have a 401k plan and an SEP plan for certain employees? I don't know. I think that is a really good question, and I'd like to look into that a little bit more and get back to you, Robert, and I'll send that information out because I think that's a great question. I have some really great financial advisors here locally that I could ask and get you a for sure answer to that. So thank you for stumping me. I love it when that happens because that means you guys are really thinking about this. So here are some questions for your advisor. If you are going to work directly with the provider, so directly with whoever you're utilizing to provide this retirement plan, you can ask them these questions or you can ask the advisors. So do you ask them first off, do you specialize in just one plan or two types of plans? You're going to have independent advisors and providers, and then you're going to have dependent ones. So maybe they only are able to offer one type, one provider. You see this a lot with health insurance. It's the same kind of concept within the financial world as well. And then especially what's your experience with firms of my size? A lot of these providers or advisors have very specific targeted populations. And very often they're large business because that's, to be quite frank, where they're going to make more money for selling a plan. And so they may not even offer to small businesses. So you really want to find somebody who specializes in working with a firm of your size. And the reason is because they are going to be paying attention to the plans that actually are best for you and your business. They are the experts in what is out there and available, and they will be able to answer the questions that come up related to those plans specifically for your business size. So that's really important. That's one reason we always recommend talking to an expert, is because they've already done the research so that you don't have to. Now, if they specialize in just one or two types of plans, I recommend talking to multiple advisors or providers, because you want to get a really good overview of what all is out there. You don't want to be locked into just one or two. And even if they're your best friends, normally they will advise you to do the same thing as well. I have seen that very often. Financial advisors often refer to other financial advisors simply because they know they have a different plan that may fit you better. You do want to ask them what kind of compensation they receive and who pays them. Is it going to be you as an employer, or is it going to come from the back end when they actually sell the plan and they get commission? And does your compensation vary based on the plan you sell? So are they going to try to sell you this specific plan because they get a 30% commission versus this plan over here that's actually better for your business, but they only get a 10% commission? You really want to make sure that their compensation is providing you with the best value. And then administrative costs, always ask about those. Ask for a breakdown of projected costs for you and your employees, and they should be able to provide that. You should always be able to get that. That should not be an issue. And then ask, this one is really, really important, does your services include general financial education, credit building information for me and or my employees? Will you come in and meet with them one-on-one to explain the plan so that I don't have to do it? Or just give them paper, because most people aren't going to read that? What all services can you provide me? Do you partner with somebody else, another nonprofit, such as the Credit Counseling Bureau, that delivers these educations that we could have come in? So really find out what all you're going to get out of that. And I would highly recommend, especially if you're new to retirement plans, really find someone who does provide that last bullet point. Okay, we're getting to the end. Basically right now, these are just some tools for you. The SBA has an enormous amount of tools for this kind of information. AARP is a really great wealth of useful articles and tips if you're looking at printing things out and giving them to your employees. This is a really great resource. If you want to do it quarterly, give them a blog to read just to get them reminding, or send out emails, things like that. We have a local tool called venturize.org that has a lot of resources for you as a business owner. It also has a map with TA providers that are close to you. We're building that map. You look at it right now and it's not great, but it's getting better. If you know of TA providers in your area that you would like to make sure are on that map, you can enter those, submit those as well, I believe, on there. TA providers, it's technical assistance providers. So people who provide you with assistance like the SBA or SBDCs or any of those acronyms, CDFIs, all those wonderful people who help you. But you can always reach out to me as well, and I'd be happy to make sure that Debbie gets that information and we get them added. We really want to build that out to make it better for you. There are also a lot of templates on there that I was talking about, your business plan, your financial cost analysis. We have templates on there that you can go print out. Okay, your next step, guys, find out, do my employees want retirement? Do I just want to do something for myself? Do I want to do it myself? Do I want to find a provider? This is a really great database for you to find legitimate providers in your area, so I encourage you encourage you to go check that out. There's all your tactics in one slide. If you want to print these out and put them on, your wall or on your bulletin board to remind you daily. Here's some additional ways to get involved with us at Small Business Majority. Connect with us on Facebook or Twitter. We're also on LinkedIn. We do a lot of local events, so please connect with us there. There's my contact information, and it's also right here. Our website, smallbusinessmajority.org, and then venturize.org. You guys, thank you so much for joining us today. I think I answered all of the questions during, but yes, this recording is going to be available. Please go to our Small Business Majority YouTube channel, and you'll find it there so that you can review this or share this with others. I'm also going to be sending you the PowerPoint presentation along with that survey link. So you guys take 5 minutes, please, and fill out that survey and let us know if this information was beneficial to you, if there's anything we could have done differently. We really want your feedback, and we appreciate your time today. You guys have a good day, and go enjoy the rest of your Tuesday. Thank you.